Hi, I'm Scott Borden, CBIZ's consumer-driven healthcare consultant, also known as HSA Guy, also known as HSA Guy, also known as the HSA Guy, also known as 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 HSA Guy. Today I'm here with Chris Schechinger, Director of Business Development. Chris, why don't you introduce yourself?
Great. Thanks, Scott. Yes, I've been with CBIZ over 10 years now. I'm the Director of Business Development here in Kansas City. And I work on the financial services side, which is, if you think about anything that touches the books, audit, tax, accounting, valuation, due diligence, those types of things.
This time of year, people think taxes, and it's normally a negative connotation, isn't it?
That is correct.
But today we're really going to talk about tax strategies and ways that we can actually use taxes to businesses' advantage, correct?
That is correct.
All right, Chris, now you've been with us for 10 years, a little bit longer than I have, and I know when I first came over here to CBIZ, everyone said Chris is the one that you need to get to know because you are plugged in and you have a fantastic overview of how all the variations of CBIZ, how they all fit together and how everyone can work together. So I'm very pleased to be able to introduce you.
I really appreciate that. Yes, so being here 10 years, I've had the opportunity to work with several people in all different service lines here at CBIZ, whether it be in benefits, workers' comp, property casualty, payroll, HR, tax, audit, valuation, due diligence, you name it. I've worked with someone in every one of those service lines. So I've really built up a good network internally to help become kind of like you said, the go-to guy when it comes to CBIZ services and being able to plug and play people where they need to be, for our clients.
Fantastic. Now, one thing that's out there that I don't think a lot of businesses know about, and if they've heard about it, maybe they've heard pieces about it, but maybe not the entire story, is the employee retention tax credit.
Yeah, so the employee retention tax credit came up from the CARES Act.
Okay.
And essentially what it was the government's way of allowing businesses to retain their employees. And so CBIZ from early on has been very involved with this. Our specialty tax department is excellent. Sean Haggerty, who runs that department, is actually a tax attorney by trade. And I've been working very closely with him and his group the last couple of years on this. And so what the government said, they said, okay, in 2019, if you have under 100 employees, in 2020, if you have under 100 employees, and you had a 50% decrease in gross receipts compared to any one quarter in 2019, you could qualify. And then in 2021, they changed it and said, okay, if you have under 500 employees,
nice, and
more than a 20% drop for any one quarter compared to 2019, you could also qualify. And so the benefit is if you do qualify, let's say for all 4 quarters in 2020 and the first 3 quarters in 2021, you could be looking at a $26,000 per employee per credit.
And that's a tax credit going to the employer just for keeping the business open during this.
That is correct.
Time. So let's say you've got 30 employees and overall 30 employees for 2020, 2021, and you met that qualification. I know there's another way that employers might be able to qualify also that we'll get into detail later. But that's $750,000 potential money that could come back to that employer. And now you said under 100 for 2020, 2021 would be under 500 then?
That is correct.
Okay, so you wouldn't qualify for the 2020. Let's say a 300 life employer then could be that's over $6 million.
Potentially, yes.
Potential money.
You could be looking at $21,000 per employee.
Full-time employee.
Full-time employee, that's correct.
So there's a lot of money available here, but there's also companies out there trying to say, oh, we can help you qualify, and it's easy to qualify for the drop in gross receipts. What's the other method?
The other method is the shutdown rules.
Shutdown, okay.
Okay, so the government basically said, if your business was more than nominally affected by the pandemic and governmental orders, you could also qualify under the shutdown rules. So for example, if you had to space out, let's say you're a restaurant, you had to space out your tables more than 6 feet. You had capacity limitations. Mm-hmm. You had to separate your employees and you had to put those screens up and you couldn't allow anyone to come in and congregate in your dining room area. Or if you're a manufacturer and you had to separate your machinery equipment by 6 feet and put up dividers, and you had to go from 3 shifts down to 2 shifts because you had to disinfect and clean in between shifts and those types of things. That's part of what the shutdown rule is. So the rule is basically saying if you are more than nominally affected by governmental orders, you could qualify. So obviously, when we do an ERTC review, we want to make sure it's done right. We're not the easy button. And I'll explain that in a little bit more detail. But essentially, you have these smaller boutique firms out there saying that they can save you all this money and everyone qualifies for every quarter, and they can do it on a contingency fee basis, and they're charging 15, 20, 30% for these services. And they're not what I would consider, CPA firms and stuff like that. It's a lot of boutique firms. So the government flat out said, if you fraudulently claim this credit, not only will you pay back the credit, you're going to have to pay interest. And oh, by the way, we're going to put 15 to 20% penalty on top of that. Wow. So what our approach has been is that, if you don't qualify under the drop in gross receipts test, which is just a simple math test, and we have to go down the road of the shutdown rules, we'll engage an attorney to write a legal memo to make sure that you do qualify. And then we do the calculations. So that does a couple things for our clients. One, it creates attorney-client privilege for our clients. Two, it creates attorney-client privilege for us and our clients because the attorney actually hires us to do the calculation. And three, if for some reason that the IRS came back and disallowed the credit, it would be very difficult for them to say, well, you fraudulently claimed this credit when you said, well, I hired a national law firm, I hired a national CPA firm. It's going to be really hard for them to disallow the credit, first of all. But secondly, it's going to be really hard for them to say you fraudulently claimed it. Therefore, you owe us 15, 20% penalty on top of the refund and interest.
So we not only help businesses qualify for the ERTC and other programs that are out there, but we help them keep their funds in the long term then, correct? Is that
Absolutely.
overall what I'm hearing you say?
So when we finish our reviews, we give our clients what I call an audit book.
Okay.
It lists everything that we've done to come to the conclusion of what that credit is worth. All our work papers, our documentation, the aggregation rules we've taken into account, if need be, the legal memo from the attorneys that we use. And we really make it a very comprehensive report, individualized for each client. It's not just a canned report that we change the name and address and phone number and all that and just hand it to them. It is truly an individualized report with our clients' facts and circumstances, substantiating why they qualify for the credit. So that if the IRS ever did come knocking, you give them that audit book and it lists everything that they would need to know about how we came up with the credit.
Nice. So if employers would like more information about it, because there's a lot of money on the line here that could really, it'd be game changer, especially a lot of businesses are working off of 2 to 5% profit margin. And there's money sitting out there that you might not be aware of. Do you charge anything for the initial consultation?
No, the initial consultation is absolutely free.
Okay. And how long does that take?
30 minutes.
30 minutes.
Yeah, within 30 minutes, we can have a good understanding whether or not we think you would qualify or not. Again, the drop in gross receipts is just a simple math test. So if we have to go down the road of including an attorney, we would involve an attorney. Again, that initial consultation is free. The attorney then could say, yes, I think you have a good case to proceed, or no, it's not, I don't think your case is going to hold up to IRS scrutiny, and then we just move on from there. But it doesn't cost our clients anything at that point. We're a little different than the other boutique firms in that we cannot charge by law a contingency fee for our services. So our fees are traditionally a lot less than what the contingency fees charge because we charge a flat rate. We do not build in a audit defense fund into that rate. Our attitude is if you do get audited and you want us to help you defend your audit, we would just bill you hourly for whatever time we would put into that defense of the audit. And so it's still going to be a lot less expensive for our clients. So they're not paying, again, 25, 30% or whatever these contingency fees are charging for that. And you're getting a top 10 accounting firm and potentially a national law firm
That's big.
in your corner, justifying why you qualify for this credit.
If you have any questions, if you're not familiar with the employee retention tax credit, you'd like to get some additional information, schedule a free consultation with Chris. Give Chris a call. What's your phone number and then what's your email address?
Sure.
I'll put it on the video here.
It's cschechinger@cbiz.com, and my direct dial is 913-948-4999. Again, cschechinger@cbiz.com, 913-948-4999.
Chris, thank you so much for joining, and we look forward to helping many more businesses over the next couple of years that we have left for this employee retention tax credit, plus many other services that we can offer them.
Wonderful. Thank you so much, Scott.